Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. If you're looking to invest $500 in the market right now, there are some great opportunities out there, and there are some overlooked stocks that you probably have heard of that I think are good buying opportunities right now. I want to cover three that I think are worth investing in. My name's Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. Check out my newsletter, Asymmetric Investing, below for other great stock ideas. And the first stock I want to go over is Spotify. Spotify is the audio company that you're probably familiar with, subscription streaming service, also ad-supported streaming service, but it's really a company that wants to own your ears. Started with music, then moved into things like podcasts, trying to grow into audiobooks. But there's a couple of reasons to be excited about this company. The user base is growing at a really rapid rate, 555 million users, growing at over 20% per year, even coming out of the pandemic. I think that was the really big surprising number. Advertising revenue is up, and the company is trying to renegotiate their contract with record labels so they can actually increase prices. Now, that's maybe not something that users are going to be very happy about, but Spotify has not increased their premium subscription prices for years at this point. So even as things like Netflix have gotten more expensive, Spotify can't just unilaterally increase prices. But that's probably coming over the next few months or quarters. So this is a company that has gone through kind of a transition period the last year or so, cutting operating costs, focusing the business a little bit more. The stock is actually up really nicely in 2023, but I think there's a lot more room to run. And if you're investing a little bit of money in some emerging stocks with a lot of growth potential, I think Spotify belongs in that portfolio. The second one is Airbnb. Airbnb is simply the name to know in travel and vacations right now. And it's got a platform that I think is going to be really difficult for anybody to disrupt anytime soon. You've, of course, got things like hotels. Those are not really going to change. We're probably going to continue to shop for them at the same places. But the companies who are aggregating those hotels, the Travelocities, the Bookings.com, they have not had a lot of success having people list their homes or vacation homes on the site like they do with Airbnb. So Airbnb has become the winner in a winner-take-all platform for vacation rentals. And that's a phenomenal position for the company to be in. They can just continue to grow as supply continues to increase in that market. And slowly over time, revenue will grow, cash flow will keep churning out. The company's financials are phenomenal coming out of the pandemic because they made so many cuts early in the pandemic. If you remember, the company actually had to raise money because their financials got so dire so quickly. But right now, very healthy company, very strong cash flow. And I think this is the kind of stock that you want to just buy and hold for the next decade or two. And the final one is a stock that's really out of favor with the market right now. That's Disney. Disney has had a lot of challenges over the last few years. There's, of course, the decline of the box office, not only because of the pandemic, but also because Disney has simply not been making good movies for the last few years. But movie titles, particularly on the kids side of things, the animation side, really tends to ebb and flow in 5 to 10 year cycles. You might remember that Disney went through this before they bought Pixar. Their animation studios were kind of out of favor. So do we see a positive cycle there that really starts to drive growth on the studio side? They've obviously got the streaming business where I think they're going to be one of the top two players, at least for the foreseeable future in streaming. That's going to be a powerful position to be in, even though that's not a cash flow business yet. Long term, if they're one of the remaining companies in streaming, that's going to be a phenomenal position for them to be in. And then, of course, you got the theme parks business. Theme parks continue to churn out profits. That's become the financial foundation for Disney. And I think it's a backbone that the company can grow on. So a lot of uncertainty with Disney right now, but that's actually a great time to buy a stock, is when the market doesn't know what the future looks like. I think you look out 5, 10, 20 years, Disney is still going to be a household name. It's still going to be a big name in media and content. That's why I like the long-term future. What do you think about those three stocks? Let me know in the comment section below. Let me know what you're buying today. Thanks for watching, everybody. See you here next time.